Let me begin with a stark reality. Real estate investors don't lose money on the purchase price, they lose money on the renovation. The deal looked excellent on paper, the rents made sense, the pro forma looked clean, and then the contractor showed up. Suddenly, the simple, light value add project transformed into a significant financial burden. Now, today, I'm going to break down renovation costs the way real investors should think about them so you never get surprised again. Now, here's the big issue with renovations. They're emotional. New investors walk into a property and they think like a homeowner. They see the ugly carpet and they say, we should replace all the floors. They see dated cabinets and they say, we should remodel every kitchen. However, in small multifamily properties, renovations should prioritize functionality rather than solely aiming for aesthetic appeal. They are about one thing: return on your investment. Every dollar you spend should bring profitable value. And if it doesn't, you're wasting your money. You are just spending to spend. Now, I teach something simple called the three bucket system. Every renovation falls into one of these three categories. Bucket one, the must do. These are the items that you have to fix: those roof leaks, electrical hazards, plumbing issues, safety problems, code violations. This bucket doesn't raise rents, it just keeps this property alive. Unknowingly, you spend a significant portion of your budget here. Now, bucket number two, those should do. These are items that improve operations, fixing deferred maintenance, updating mechanical systems, replacing old HVAC, improving those common areas. They don't always raise the rents immediately, but they lower expenses and your headaches. Now, bucket number three, what you want to do. This is a dangerous bucket. Granite countertops, fancy backsplashes, high end finishes. Now, these are wonderful, but they only make sense if your demographic can actually support them. And here are the four biggest mistakes that I often see. Mistake number one, underestimating scope. You think you're doing just a cosmetic turn, then you open up that wall. Now you suddenly need new plumbing, new wiring, new insulation. What you once viewed as a $6,000 turn suddenly becomes $16,000. Now, mistake number two, using retail prices instead of investor prices. Home Depot is not investor pricing. Contractors mark up materials. Labor takes longer than expected, and timelines actually will slip. Mistake number three, forgetting those hidden costs: dumpsters, permits, holding costs, vacancy during construction. Renovation is more than just materials and labor. Now, mistake number four, no contingency. If your budget is $100,000 and you intend to spend the entire amount, you are already setting yourself up for failure. You already failed. Here's how an actual professional will do it. Now, please review your contractor estimate and automatically add 10% for overages, 10% for unknowns, 10% for those timeline delays. Now, I call it the 30% reality check. If the deal still works after adding 30%, it could potentially be a favorable deal. Now, also remember this formula. The cheapest bid is usually the most expensive project. Quality contractors save you money. Bad contractors bankrupt those deals. So here is the final takeaway. Number one, renovations are a business decision, not a design decision. Number two, fix what matters, not what looks appealing. Number three, always separate must do from want to do. Number four, build big contingencies. Number five, assume everything will cost you more and take longer. Now, if you master these renovation costs, you'll master small multifamily investing. Profits are not generated at the time of the purchase. They are generated when you renovate intelligently. Learn to control those renovation costs, and you will control the deal. And that's how you bounce.